Ladies and gentlemen, good day and welcome to Krsnaa Diagnostics Limited 3Q FY23 earnings conference call hosted by Equirus Securities Private Limited. We have with us on the call Mr. Rajendra Mutta, Chairman and Whole-Time Director, Ms. Pallavi Bhatevara, Managing Director, Mr. Yash Mutta, Whole-Time Director, Mr. Pawan Daga, Chief Financial Officer, and Mr. Nikhil Deshpande, Company Secretary. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Pallavi Bhatevara, Managing Director. Thank you, and over to you, ma'am.
Thank you, Bharat. Good evening, everyone, and welcome to Krsnaa Diagnostics Q3 FY23 earnings call. And I thank each one of you for joining us today. We've already circulated our earnings presentation, which is available on our website as well, and all the stock exchanges website. I hope you all have had the opportunity to go through the presentation. From an industry perspective, the need for high quality and affordable diagnostic services are clearly visible, as it is an integral part of healthcare industry which plays an imperative role in diagnosis. Assessing diseases plays a major role in the treatment, management, and even prevention of diseases. Today, the Indian diagnostic market is valued close to $15 billion and projected to CAGR of 11.5% in upcoming years. The key fundamental drivers of diagnostic industries, such as large population of almost 1.4 billion people, rising per capita income allowing increased affordability and need to access better healthcare services, emergence of lifestyle diseases, increased awareness of preventive health checkups, and government initiatives. Overall, looking at the diagnostic Indian demographics, there is a vast and underpenetrated market of diagnostic services which offers an immense opportunity to both organized and unorganized players. Furthermore, recognizing the importance, the Government of India has allocated rupees 88,956 crores to healthcare expenditure, rupees 2,350 crores, which amounts to a hike of 2.71% from rupees 86,606 crores in FY23-24, making high-quality healthcare and diagnostic services affordable for the masses. The government and various states are continuously evaluating PPP as a viable and best alternative for their goal of providing high-quality healthcare and diagnostic services at affordable prices. Today, Krsnaa is a leader in PPP diagnostic space, and we are proud to have expanded our presence all over India, making high-quality diagnostic services affordable and available to remotest corners in the country. We are well positioned to serve our patients, and we see tremendous runaway ahead to build upon our solid foundation. I am pleased to inform that recently Krsnaa has been awarded with 2 major pathology tenders, one in the state of Maharashtra for setting up 1 lab and 600 collection centers, and another one in the state of Odisha for setting up 5 labs and 386 collection centers. With these wins, we continue our journey of expanding our footprint across the country and especially in newer territories and geographies, thereby increasing our customer base. The recent wins are also aligned to our focus of increasing our business shares in pathology and therefore create a healthy balance between radiology and pathology. We are happy to announce the launch of its new GenX system, the first fully integrated iron torrent NGS platform in PPP model, and offers a fully automated specimen to report workflow with unparalleled turnaround times. The GenX system sets a new standard in NGS technology, and we are confident that it will have a significant impact on the molecular pathology community. Further, I would also like to update you all on the status of radiology and pathology project in the state of Punjab. We have operationalized 24 out of 25 radiology centers, and the remaining 1 radiology center will be operationalized by Q4 FY23. All the 30 laboratories and 95 collection centers in Punjab are now fully operational. I would also like to add that we have operationalized entire pathology project in the state of Himachal Pradesh, and additionally, we have also successfully implemented the tele-reporting project in the state of Tripura thus extending our reach to the far east corners of India. We are progressively expanding our presence, and during the quarter, we have added 7 radiology, 33 telereporting, 25 pathology labs, and 64 collection centers. As of today, Krsnaa is a leading PPP diagnostic player with 127 radiology centers, 1,522 telereporting centers, 97 processing labs, and 741 pathology collection centers. Looking ahead, considering the ramp-up of our recently installed centers and the new tender wins, and considering few projects in pipeline which are under evaluation phase, Krsnaa Diagnostics remains confident to further expand its geographical footprint and penetrate deeper into the Tier 2 and Tier 3 cities by offering high-quality diagnostic services at affordable prices. Now coming to the financial performance during the quarter. During the third quarter, Krsnaa registered core revenues of rupees 118 crores, growth of 12% year-on-year. The COVID-19 revenues declined from rupees 1 crore in Q3 FY22 to rupees 0.1 crores in Q3 FY23. Our EBITDA stood at rupees 30 crores with margins of 25% and net profit of rupees 14 crores with margins of 12%. The increase in new centers being launched, the profitability margins remain stable quarter on quarter as revenue contribution from new centers continue to grow. The margins are expected to improve in the upcoming quarters with the maturity of these newly launched centers. On the B2C side of business, we have launched wellness packages at affordable rates which help us to expand in the B2C side. The wellness packages Ayaksham, which covers basic tests as well as special tests. Further, in terms of technology adoption, we have also continued our focus, and as part of the phase 1, we shall be launching the website for the B2C segment in the next month with more technology-led initiatives being implemented in the following months, including digital pathology, integrated lab management, etc. With all these initiatives underway and considering the implementation of existing projects as well as considering the recent wins, we are confident and believe that we have a strong outlook in the future. Now, I will hand over the call to Mr. Pawan Daga, our Chief Financial Officer, to discuss the financial performance. Thank you.
Thank you, Ms. Pallavi. Very good evening to all the attendees. I will present financial highlights for the third quarter and 9 months ended December 2022. In the third quarter, the company registered total revenue from operation of rupees 118 crore, an increase of 11% on a year-on-year basis from rupees 106 crore. The growth is led by a core business comprising of radiology and pathology, which registered revenue growth of 12% year-on-year. Operating EBITDA for the quarter at rupees 30 crores, EBITDA margin were 25% in Q3 FY23. EBITDA margin were partially impacted due to additional cost incurred on onboarding team to operate and run the newly launched center. The margins are expected to improve in upcoming quarter with the maturity of the centers. Profit after tax for Q3 FY23 was rupees 14 crore. For the quarter, PAT margin were 12%. In the 9 months FY23, the company registered total revenue from operation of rupees 354 crore. Our core business comprising of radiology and pathology, which registered revenue of rupees 353 crore, a growth of 14% year-on-year. The COVID revenue declined by 92% from 1 crore in Q3 FY22 to rupees 0.10 crore in Q3 FY23. Operating EBITDA for 9 months FY23 stood at rupees 89 crore with a margin of 25% for the quarter, and profit after tax for 9-month FY23 at rupees 43 crore with a margin of 12%. We can now open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Khemka from InCred PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. Hi, everyone. Few questions. Firstly, to begin with, if you can talk about the operating cash flow for this year. As you mentioned in the presentation, I think slide 7, the operating cash flow for this year, 9 months, seems to be 239 crores, or rather 24 crores versus last year 65 crores. 66 crores last year. So, and a large reason for that obviously seems to be the increase in receivables, which has gone up from 76 days 9 months last year to 97 days this year. So, what is causing the increase in receivables? That's question number 1. And question number 2, is there any other, issue with the operating cash flow that, we need to pay attention to?
Sure. So Aditya, in terms of the cash flows, you picked up right that there has been an impact of the receivables. Now, if you see the receivables, normally in this time of the year, which is around Q3, the receivable days go around 94, 97 days, which is in our line of business. And if you see, even comparatively in the previous periods, you'll see a similar trend that has occurred. That is the reason why the receivables are, almost in the range of about 90 days plus. Now, the reason why this happens is, typically if you see from Q3 onwards to Q4, the authorities will start basically closing out their whatever processes so that before March end they can complete the payment so that their next year budget doesn't get impacted, because they have to basically pay out. Otherwise, if they don't pay us before March or before the year end, then their next year budget also get impacted. So this is a typical cycle we see in our line of business, and we don't see any concerns around it. The other reason in terms of the cash flow, I think Pawan might want to add a few points.
No, the main reason, which is the increase in receivable days, that's the concern here, where we see the cash flow from operating activities are low compared to the last 9 months.
So basically, it's just a part of our routine business, and like we've demonstrated in the past as well. Come year end, the receivables will go down, and we should be able to collect our outstanding dues.
Right. So Yash, what has been the capex that we have done this year? Obviously, for the newer projects, there has been OPEX done, which is we can see in manpower and other expenses. But what is the capex we have done this year in 9 months?
Yeah, I think Pawan.
In total, around 107 crores of a capex we have already incurred till 9 months.
And what is the budget for the 4th quarter?
So in the range of, in a similar way, 20 to 25 crores, which is as per the plan, which we have to get executed by this Q4.
Understood. Understood. That helps. Second question is on the gross margin. So if I just look at the past 8 quarters, right, and I'm starting 8 to 10 quarters. So I'm starting from Q1 FY21 to Q3 FY23, the trend that I can notice. So, Q1 FY21, Q2 FY21, our gross margins used to be 70 to 75%. Then starting Q3 FY21, the gross margins dramatically went up to 83, then 87, then 89% also. And now we have again started seeing for the last 2 quarters, the gross margins declining from that 88, 89% to 86%, and this quarter 84%. So question part 1, why did the gross margins from first half FY21 from 75% go up to 88, 89%? Part 2 of the question, why is that 88, 89% in this year now starting to come down to 84, 86%?
So Aditya, basically what you see here in the gross margins, one of the key components that was there earlier was the Rajasthan business. Now in the Rajasthan business, because we had the arrangement with our business partners, hence, in terms of cost, it was basically straight away they were managing most of the cost, and we had very little component, and which is why the gross margins were higher. After the Rajasthan project got over, and since that arrangement is no longer there, that is the reason why you are seeing a slightly softer, gross margins where it has reduced.
So the another impact in the P&L side, which is the revenue sharing, fees to hospital has reduced.
Yeah, so which used to be, I think about 25%. Now it has come down to about 21%.
Yeah, exactly. So that was my other part of the question. So just remind me this Rajasthan tender, which we stopped doing, I think sometime in August, you said last phone call. What was the size of this tender per annum?
The Rajasthan tender, what we were doing was about 70 odd crores annually, 70 crores last year. I mean, the one that we were doing.
Yeah, so that's 70 crores last year. And the reason why we stopped doing it because we wanted to bid for the larger tender, the one that is supposed to, come up in February.
Yes. Yeah, there were two parts. After the tender, we also got an extension and we served the extension period. In the interim, the government had launched a smaller tender, which we did not want to participate, because it didn't make sense from a business perspective. And now the government has come up with a much larger tender, which has more collection centers and more labs. And I think that, that's much more bigger business than what we had done in the past, inter Rajasthan, and which we have currently bid, and we are awaiting the results.
So yes, just sorry, can you just talk about this a little more? So this 70 crore per annum tender that we stopped doing, we stopped doing it because the contract period got over, or we stopped doing this by choice because we had to bid for the new tender? Which of two is it?
No, we stopped it because the contract period got over after the extension that was granted to us.
Got it. So the extension period also got over basically. So the contract expired essentially.
Yes.
Right. And that is why now the new tender is coming, which is larger, you are saying. And the potential of this tender is how much, the newer tender?
Well, I think if you see from the government, the way they put it, it's roughly about around 450, 500 crores.
250 to 500 crores.
No, 450 to 500 crores.
450 to 500 crores per annum. Oh.
No. This is spread over, I think, a couple of years.
Okay, spread over a couple of years. So per annum would be about 225 to 250 crores.
Yes.
Okay, understood. And yes, just help me understand this as well. So if we, since we are incrementally winning more and more contracts in pathology, are the pathology gross margins, EBITDA margins going to be lower than our consolidated EBITDA and gross margins that we are doing historically? Because radiology to me seems to be a higher EBITDA margin but a lower ROC contract, whereas pathology seems to be a lower margin and a higher ROC contract. Am I on the right track when it comes to analyzing these two businesses?
Yeah. Yes. So from, comparing between radiology and pathology, certainly pathology margins, EBITDA margins are a bit lower than the radiology. But I think the difference will not be significantly high between radiology and pathology. It hovers around, anywhere between 5 to 7%. And also one of the reasons why, because there have been more pathology tenders. And also to, like we've been saying, we want to have a healthy balance between radiology and pathology. That is the reason why we've also participated in these tenders and continue to win them. And of course, from a ROC perspective, pathology, is better compared to radiology.
Understood. And this entire 11 crore decline in fees to hospitals from 27 crores to now 16 crores a quarter, this entire 11 crore per quarter decline in fees to hospitals is purely because of the Rajasthan tender? Because it implies that in a contract that you were making 70 crores, you were paying 44 crores, 11 crores into 4 quarters. You were paying 44 crores to hospitals as fees.
Yeah, so basically what we have done is in larger states, we normally go with business partners because these are far-flung places. So we look at local partners with whom we have arrangements where they provide us certain services, and that is how it was, where we were paying fees to them. So like I mentioned in the previous calls as well, over a period of longer duration of the contract, then we even absorb some of these employees onto our rolls, and basically the share of the revenue contribution keeps on reducing year on year.
Understood. A couple of more questions from me. In the Punjab tender, so if I understand correctly, all our subsidiaries that we have are linked to the Punjab tender because of the way the tender has been drafted. Am I right?
Sorry, if you can just repeat that question.
Yeah, sure. So all the subsidiaries that Krsnaa has as an entity, as a parent entity, the subsidiaries that Krsnaa Diagnostics has, these subsidiaries are all linked to the Punjab tender, or there are other tenders also which require us to have subsidiaries for different centers?
Already, it's linked only to Punjab tender.
Only to Punjab tender.
No.
So basically, there was a very specific requirement in the tender for Punjab, where after winning, they wanted us to create subsidiaries for each of these clusters. And that is the only reason why Krsnaa had to create subsidiaries. Otherwise, in our history, we never had subsidiaries. And since this was a specific requirement, they had to be created, and accordingly, they are 100% subsidiaries of Krsnaa Diagnostics Limited.
Yeah. So then if I look at the difference between your consolidated profit and your standalone profit, the loss that I see in the subsidiary level, which is about 3 to 4 crores, that loss is purely coming from the Punjab tender?
Yes.
And this is 3 to 4 crore a quarter. That's the loss we are making in the Punjab tender as of now.
No. So if you see Punjab tender, I think as I said, the subsidiaries are only for from the regulatory perspective. Financially, you should look at consolidation because, for example, the fundraise which happened for the IPO happened in the list, the holding company from which the equipments were purchased. So the subsidiaries are purely just from an the tender requirement perspective, because there are certain revenue upstreaming which happens from the subsidiary to the holdco. There are certain expenses which are there in the holdco, and some of them are in the subsidiary. So I think it is basically the consolidated the way you should look at our business, and not from a subsidiary to a holdco perspective.
Fair enough. And any update on the income tax investigation that was ongoing? Any conversations or dialogues you have had with the IT department?
No, I think as of now, whilst we have submitted all the requisite information, there is no update or no any information that we've received from the authorities, and we are also equally waiting to hear from them.
Okay, all the best, guys. I have more questions. I'll come back in the queue.
Sure. Thank you.
Thank you. The next question is from the line of Janil Shah from JM Financial. Please go ahead.
Yeah, hi. Thank you for the opportunity. Yash, my first question is on the potential of the newer tender wins, the BMC collection centers and the Odisha collection centers. So, what is the, potential?
I think Pawan will just answer that.
So, BMC, where we are looking for annualized revenue of 30 to 40 crores, considering the 600 collection center and 1 processing lab.
And Orissa?
Odisha, 50 to 55 crores annualized revenue, which we are expecting from 5 labs and 360 plus collection centers.
Okay, and just a follow-up to the previous participant's question. So we have lost this Rajasthan tender from when, and what has been the impact in this quarter? So what was the contribution of that Rajasthan tender in 3Q last year?
So Rajasthan, we have discontinued or the tenure is completed in August 22, mid of August 22. So in this quarter, there is no contribution from Rajasthan pathology per se.
No. So how much was the contribution in the last quarter? I mean, last year.
Last quarter, somewhere 11 to 12 crores.
Okay. So hence your base business is showing lower growth. Is that the right understanding?
Could you just repeat that question?
So we were talking about 15 to 20% growth in our base business. So I mean, it's not, we are just seeing 12% growth. So the difference is the contract that we've lost. And
if you see the growth we've achieved is in spite of the loss of Rajasthan revenue.
Right. And any impact you're seeing on FY24 guidance because of that? Are we revising it?
So FY24, whatever we had basically considered, we knew that Rajasthan will not be there. So FY24, I think from a guidance perspective and considering the Punjab experience, we are looking at about 750 crores is what we are currently working. I think by end of this year, when we'll have more clarity in terms of given these projects, Punjab completely getting deployed and other projects, I think maybe I'll be able to give a much more realistic guidance, in the next quarter.
Also, Yash, Jainil, we've not lost the Rajasthan contract. The contract tenure got over, and it is for rebidding. So it is a stop of services for a particular period because we got extension for the contract, and even the extension period got over. And hence now the government is retendering it because of the process to be followed. So we've not lost the contract. We have just stopped the services due to the tenure exhausting.
Fair enough. Fair enough.
Yeah.
Yeah, that's all from my side for now. Yeah. Thank you.
Thank you. The next question is from the line of Chinmaya Bhargava from LSSB Family Offices. Please go ahead.
Hi, thanks for the opportunity. I have two questions. The first is on disclosure. So a lot of the questions that participants have been asking you could be solved easily by sharing your test volumes that have happened over the few quarters. Can you please tell me why we've stopped disclosing this, or at least not disclosing data with a lag, which will help us understand better how the business has performed over time?
Yeah. So, we of course started sharing this information, if you see in the earlier presentations. However, considering the recent various tenders which we have participated, a lot of our information that we are publishing has been used, and which unnecessarily creates, in a way, a lot of competitive challenges for us. We, of course, we wanted to disclose this information, and I think in the year end we will be sharing the information, but on a quarterly basis, because there are a lot of these tenders discussions going on, and some of these people, they just use the numbers and basically come with some very weird tender quotes, which has kind of we've seen, and that is one of the reasons we decided to hold. We've also seen a comparison with what information is being shared amongst the peers, and I think to that extent we are trying to share as much as information possible. But given that there are some large tenders also that we wanted to participate in, and hence the reason to not disclose. So in terms of whatever information is relevant and required for the investor community, I think we are sharing all of that information.
Okay, so two follow-ups on this. The first is in terms of prices that you've bid for various tenders, surely that is anyway public information, right? So for tenders that you've won, that data is already out there. So would disclosing these figures change what's...
Well, I think, see some of these questions which are more in terms to do with the number of patients, volume, and then the discounting, people can join the dots, and, there are, we've seen some very, cases where some very high kind of unreasonable discounts are quoted, seeing what are numbers, and hence the question. I think, we are conscious of the fact that there is an information, that needs to be shared, and accordingly we are giving whatever information is required. And anything that is required, we can do on a personal, whenever, if any, like, for example, investors need information, we can happily share that, on a one-on-one basis.
Thank you. The next question is from the line of Darshil Javedi from Crown Capital. Please go ahead.
Hi, good evening, and thank you so much for taking my question. So, sir, I just wanted to ask questions. It's kind of a follow-up question. So, we were saying our potential for our BMC and Odisha is roughly combined nearly 90 crores of potential. So, how would it kick in? Like, we were planning to have some 200 pathology centers in BMC. So, could you just help me with the progression of revenue that we can expect? Maybe how much we are expecting in FY24, and how will it just operationalize?
So, from a BMC perspective, of course, we'll try to operationalize the center in this next quarter in terms of establishing the center, setting up the lab. But I think meaningful contribution of revenue should be seen only in the next year, hopefully by Q2 or second quarter, because it takes time to ramp up, and given our experience and the logistics part of it, we expect it to roll up from Q2 onwards. Odisha will take a bit time as well, because it's a very, if you see the location-wise, geography-wise, it's a wider area to be covered. The good part is Krsnaa will have its footprint across these locations, including Mumbai as well as in Odisha, and that also paves us additional way to look into increasing the B2C model as well.
Okay, so around from BMC, we can, incrementally we can expect around 20 odd crores of revenue maybe in the next year if we are planning to operationalize by Q2. Would that be a fair assumption, sir? Okay.
Yes. So the centers would be collection centers would be activated as per whatever timelines we have to commit to the authorities. But I think ramp up wise, we would be a bit conservative in terms of how the ramp up will happen, and eventually from Q2 onwards you'll start seeing the business gearing up.
Okay, sir. And sir, our FY24 guidance that we were just talking about. So, sir, we are planning to double our revenue. So, we just spoke about, I think, 700 crores, but I think this year only we will be crossing, I think, 450 crores easily. So, doubling would be nearly 900, right, sir? Or, am I...
The doubling that we had, the doubling that we had quoted was from the FY22 base number. See, aspirationally, directionally, we would want to achieve that, and we are working towards it. The only challenge is, with these Punjab experience that we've had, and at the same time, to ensure that the investor community also has a realistic, expectations, we just want to come back with some more thoughtful approach to the expectation. And hence, we said, hopefully by end of this quarter, the next quarter, we'll come back in terms of the more realistic guidance that we expect we can achieve. But I think if you see the way we are currently focusing in winning these tenders, at the same time working in, even if you see the overall growth that we've achieved, including in this Q3, I think compared to whatever is happening in the industry, whether with our peers, Krsnaa still has demonstrated in our opinion, a good performance, and we hope to continue the same in the subsequent quarters.
Yeah, correct. And if I may have a few more questions, can I ask them, sir? Hello.
Sure.
Yeah. So I just again, it's another clarification that so our Rajasthan business, we've shut down in mid-August. So we would have, I think, sir said 11 crores of revenue we booked in Q2, correct, sir? So basically, if we exclude that, we have actually grown by 6 crores of revenue in Q3. So I would just want to know, our new all operationalized, we have yet to deploy some assets. So how would we just see the ramp up of these coming in? We have some 40 plus CT scan machines and everything. So just could you help me in, maybe Q2, Q1, when will we be able to see a significant jump? Because I think it would be a it will be a non-linear jump, correct, sir? Because, a lot of them will come together. So could we have some...
So I think...
Yeah, sorry, sir.
Yeah. No. So I think that's a good question. If you see, we have the Maharashtra project also, which is a large project, almost of 39 CT scans to be deployed. And then we have the recent wins of Odisha and BMC. Now, Maharashtra being a large project, it will take almost from an installation perspective, and assuming we get all the centers handover from the government, we are still expecting it, the ramp up in terms of implementation of the centers will take anywhere by end of Q2 or Q3 of the next year. And likewise, as I said, the BMC and Odisha will start kicking in from Q2. So I think Q2 onwards we should see a ramp up in terms of our overall business. The new tender wins to contribute revenues to our existing base.
Okay, so just to summarize, so the next Q1, Q4 and Q1 we might see our current range of revenue, and then from Q2, Q3 onwards we will see a bigger step up, sir. Would that be fair, sir?
Sorry, if you can just repeat that.
Yeah, so I was just asking, sir, Q4 and Q1 would be our current range of revenue, and then from Q2, Correct. Q3 you would see a higher growth revenue, sir.
Yes, we should see increase in the revenues.
Okay, sir. Thank you so much, sir. That helps me a lot, and all the best for the future. Thank you.
So,
Thank
thank you.
The next question is from the line of Punit Mittal from Global Core Capital HK Limited. Please go ahead.
Hi, thank you for the opportunity. Two questions. One is the projects that you mentioned on your slide 19, which are the new projects that you're undertaking, which has 50 radiology centers and 992 pathology centers. Can you tell me what will be the total capex requirement for these projects?
So, Maharashtra, I think there are about 39 CT scans. So that could be roughly about around close to 50 odd crores, between 50 crores. And which was the other one?
I was saying about all the projects, right? The total 50 centers, radiology centers, and total 992 pathology centers that you mentioned on slide 19.
No, niche wala. Sorry, the Odisha and Maharashtra put together would be about close to 100 odd.
Hello?
Hello?
Yeah.
Hello?
Yes.
Odisha and Maharashtra, I think if you're referring to those 386 plus 1 and 600, that would be about 150 crores of total investment that we'll have to do for Maharashtra and Odisha.
That's for the pathology centers, 386 and 600, right?
Yes, correct.
You're referring to the investment, right? The
Correct.
capex
I'm
investment.
referring to the investment for both the 50 radiology centers and 992 pathology centers that you mentioned in slide 19, correct?
Okay. No, my apologies. I think we misunderstood. So the capex that we plan for Maharashtra and the Odisha project that are mentioned on the slide, that would be in the range of about 50 odd crores put together.
Okay. Okay. The next question, which you may have answered in your previous calls, but apologies for repeating that. When, for example, you said the Rajasthan project got expired and you have basically, you had set up the projects when you got the contract. So, for example, when you get the new contract, you set up the projects and things like that. Once the contract expires, what do you do with the machines and all that that you have installed in these centers?
Sure. I think there was some static. If I understood your question correctly, you're asking what happens with the equipments that in the case of Rajasthan, right?
Correct.
What is your question? Yeah.
Yes.
So see, basically, typically these are, like in case of pathology projects, these are very portable equipments which can be deployed at other projects because these are owned by us. They are in our books and our balance sheet. So as and when, if we require to move them to other locations, we can do so. Now, in the case of Rajasthan, it's just we knew that, there's a tender. So as of now, we'll have those equipments there. If required some of these equipments, we can relocate at other private collection centers or private labs as well. So these equipments can be deployed wherever we feel it appropriate to do so.
Okay. And my last question, when you do these capex for these centers, do you depreciate these the assets over the life of the contract, or how do you do the depreciation for these assets?
So for the equipment, we do as per the life of the equipment, but for the infrastructure and other things, which we do for the life of the project.
So as I said, these equipments can be deployed, whether it is radiology or pathology, these equipments can be deployed. So considering the life of the equipment, the depreciation is done, which is also reviewed by the auditors, and accordingly, from the accounting standards perspective, the depreciation is carried in the books.
Got it. Got it. Thank you so much, and all the very best. Thank you.
Thank you.
Thank you.
Thank you. Next question is from the line of Jamie So from HSBC Asset Management. Please go ahead.
Hi. Hi, good afternoon. Just a very quick question from me. I'd like to refer to the same slide that the other gentleman referred to in terms of the project, slide 19, projects other than mentioned in RHP. When I look at that slide on the third quarter and compare it to the slide on the second quarter, the radiology center declined. Total center declined from 60 to 50. On the other hand, the pathology centers grew from 200 to almost 900. Are these two slides referring to the same thing? And how should we go about reconciling these numbers? Thanks.
Yeah. So I think what you are referring to in terms of the numbers, basically these are the centers which are currently under implementation. And the ones that you see refer to 992, basically these are the new projects or new centers that we have won in this quarter. So basically it's quarter-on-quarter movement between centers that are currently under implementation and those that we've added new centers into our pipeline or which are now going to get implemented in the subsequent quarters.
If you're referring to the last Q2 implementation tracker where Uttar Pradesh, where we mentioned 4 centers, 4 radiology center will be operationalized in Q4, but out of that, 2 has already operational and 2 is in the pipeline, which will be operationalized in Q4 FY23. So this is kind of a status we are changing and adding the new projects which are coming up.
No, I get the timing of it, but there is a line or column on the table that basically sums up every single radiology center that is under, either operational, to operational, constructed, or work in progress, right? On the total number, on the third quarter slide, it stands at 50, but on the same slide in the second quarter, it stood at 68. So it's so quarter on quarter is down by 18. And then on the pathology center, the same number, excuse me, increased from 214 to 992.
Yeah. So, Jamie, if you see in the Q2, we would have shown about Tripura, where there were 18 centers which were under implementation. Now, these 18 centers have already been operationalized. So, basically, from that 68, if you remove 18, you will have 50, which is what you are seeing in Q3. So, as the centers get implemented, they move from this table because these are only tables which are currently under implementation.
Oh, I see. Okay, I get it.
Basically, we have completed the center. They're still in our network. It is just showing which are completed and which are still in the pipeline.
Oh, I see. Okay, got it. Thank you.
Thank you. Next question is from the line of Manoj Dua as an individual investor. Please go ahead.
Good afternoon, sir.
Manoj, please use the handset, sir. You're not very clear. The audio is not clear.
I'm audible now?
Yes.
So all Punjab centers has been now functional. How much sale we can expect in next financial year from the Punjab center?
So Punjab, we expect about close to 60 to 70 crores annualized revenue in the next fiscal.
Okay. So subsidiaries might not give the actual profit figure, but sale revenue can we take from the subsidiary of the Punjab?
Sorry, if you can just repeat that.
Whatever revenue the subsidiary is reporting, we can take that is a revenue from the Punjab center?
No. As I said, the subsidiaries, there is a certain arrangement that we've had where, because the investment is made by the holdco, in that case, Krsnaa, the Diagnostics Limited, and there are these various subsidiaries. So there is a certain revenue sharing that happens between the subsidiary and the parent company, because the investments are in one company and the operations are the other company. As I said, the subsidiary was purely from the regulatory requirement, and also the accounting is done in the way the arrangement was there between the holdco and the subsidiary.
So what was the revenue from Punjab in this quarter?
12 crore.
12 crore. Like we were doing the Rajasthan center, and the tender got stopped after the extension. So normally what we see is that services don't stop. So in this case of Rajasthan, those services were stopped. So won't that be difficult for the patient that suddenly services are stopped? Can you comment on that?
Yeah, I'll just comment on that. So basically, if you see that Rajasthan tender, it cannot be said it was stopped. The contract tenure was completed. After that, the government basically brought in a new tender. But again, when we participated, there were a lot of, as I said, competition that had come in with a lot of complications around the tender. Then it got cancelled, and now it has come for rebidding. If you see our past experience, there was the first tender when we had one for Rajasthan. When it came for extension, we bid for it, and we continued for another period of 3 to 4 years. So basically, there is a continuity that happens in these tenders. Only in this particular case, because there was a lot of interest and some complications that were there in the tender, because of which it had to get cancelled, and that is where this gap has now come up. Otherwise, normally these tenders work in continuity.
Okay. Can you give me the capex requirement for the new BMC and Odisha pathology orders? What would be the capex for that?
Together 20 to 22 crores approximately capex we are requiring.
Okay. Thank you and best of luck.
Thank you. The next question is from the line of Aditya Khandelwal from SIMPL. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So when we came to the IPO, one of the key advantages of our model was that we used to open centers in the hospitals, and the in-house patients would help us with the revenue growth, and the ramp-up would be fast. But when we look at the Punjab order, there has been a delay in the ramp-up of revenue. So just wanted to know what are the issues we are facing in this Punjab order.
Correct. So Punjab, from all our collective experience of the past more than a decade, excuse me. Sorry. So more than the the experience that we've had in the past versus Punjab proved to be an exception for various reasons. There was a change in the government, and when they came in, then in terms of getting the necessary approvals from the authorities took time. So that led to delay in implementation of the project. Also, one of the key things that is kind of putting a hindrance to the revenue ramp up is the Punjab is purely cash business. Now, typically in government business, when it is under the free diagnostic scheme, then you will see a very good ramp up because patients come and they avail these tests. Because it is entirely cash driven, that is one of the reasons that we are seeing where the ramp up has not happened the way we had anticipated. Now, of course, that we'll have to do more of, in terms of community outreach, and all those initiatives are being undertaken to educate the consumers and, showcase that these are the kind of facilities that are available, and hopefully that should translate into additional or increased revenues in the subsequent quarters or the year itself.
Right. So, sir, when we had bid for the contract, we would have made some assumptions regarding a particular revenue growth and particular total revenue across the contract period. Now, because of this delay, our revenue projections would have taken ahead. So the return which we would have calculated would be lower now because of this delay in the ramp up. Or you think the IRR which we had earlier estimated, we would be able to achieve that?
I think you're right. From a timeline perspective, the IRR would have been delayed. But as I said, potential wise, and like today now, more and more people are becoming aware of the kind of centers we have deployed in Punjab, the rates at which we are offering, and which is also being seen in in translation in terms of more volumes coming to our centers. So I think it's a matter of time where once these projects achieve their true potential, whatever projections we've made, we should be able to achieve this. And we've seen that in the past as well in some of these projects where there are delays happening. It is more of a timing difference, the way I look at it, a couple of months here and there, but then the projects get streamlined, and that's one of the uniqueness or beauty of our business model.
Okay. And if you could just give us a split between the margins which we are making for the old centers, the pre-IPO, the centers which we had opened pre-IPO, and the margins which we are making the new centers, If you could just provide a split between them.
I don't think so. I would have had that split with me.
Ready. We don't have a handy as of now.
Yeah, we can share that information to you separately.
Sure. Thank you. That was all from my side.
Thank you. Next question is from the line of Aditya Khemka from InCred PMS. Please go ahead.
Yeah, hi. Thanks for the follow-up. So Yash, if I understand correctly, compared to FY22, when we did, let's say, revenues of 450 crores, and this year FY23 will be in the range of 470, 480 crores. So last year we would have done almost 70, as in FY22, we would have done almost 70 crores from the Rajasthan tender, which in FY23 would be how much? About 30 crores or more?
Rajasthan in FY23 would be close to about 40 odd crores, 36 odd crores, yeah.
36 crores. And then last year there was a 32 crore COVID revenue, which obviously this year is like 2 crores. Am I right?
Yeah, I think last year it was close to 40 crores. So if you see put together, 70 crores of revenue has not been there, which is because of COVID and Rajasthan not being there. Yet we've been still maintaining that kind of revenue growth by end of
exactly. Yeah, so basically if I knock off 70 crores from the base year, we are looking at a 385 crore revenue of FY22, comparing that to whatever 470 something will do this year.
Right, yeah. So that is the kind of growth we have still maintained and continue to grow.
Correct. No, that makes sense. The other question is, you have a couple of, data points we got from the government website, where it seems that there are maybe 3 CT scans which are coming up for expiry, I think, which we run. I think one of them is the Nashil district in Ghoti, and then there is a Jammu, I think, J&K, and then there is Madhya Pradesh, one hospital. These are CT scan machines, which I think we had contracts for 7-8 years, and now I think these contracts are expiring sometime in 2023. So could you talk about what size of contracts are expiring in 2023? I understand that we may get extension, but as an investor, would be good to know what could be the potential revenue loss we could face in 2023. This is the calendar year 23 I'm talking of. So FY24 basically.
So Aditya, I think again, thanks for bringing that. So if you see for MP, we've already got an extension for 1 year and that continues. And typically we've seen, given that, like the investment and radiology projects, normally the extension happens. Jammu also, there's already an extension in place, so we don't see any of these tenders coming up for expiry in at least the next fiscal. I think the other one is Nasik. Nasik is continuing. I don't see that coming to expiry anywhere soon.
Okay, so in your assessment for the next 1 to 2 years, there is nothing significant coming up for expiry?
Yes.
Okay, that is understood. Last question. So, you said that when these contracts are not renewed, especially your pathology machines, you are able to transport other locations where you may be setting up pathology labs. But what do you do with the radiology scanners, the MRIs, the CT scanners? Do you also transport them?
Yeah. So, for example, see now, over a 10-year period, we would have already recovered the investment that we made in our radiology equipments, whether it is a CT scan or an MRI, given our kind of payback that we expect. Hence, these machines we deployed. We can deploy it to either private centers. We can deploy it to tier 2, tier 3 locations. So there is absolutely flexibility in terms of how we can use these equipments, and there is no kind of any hindrance or bottleneck in using these equipments.
Right. And am I correct in assessing that ending FY23, radiology would be about 55% of total revenue and pathology will be 45%? Would that be the split, broadly speaking?
I would have loved to answer that, but I don't think so. I have an immediate answer to this. Maybe, towards the close of the year, we'll have more clarity on that.
Sure. I'll get back on that with you. Okay. Thanks, Yash. All the best.
Thanks, Aditya. Thanks.
Thank you. The next question is from the line of Vinit Jain as an individual investor. Please go ahead.
Hi, thank you for the opportunity.
I wanted to ask some details about the retail strategy. I think you all have highlighted it in part in the investor presentation on slide 23. I wanted to understand what our broad projections are for this space and what are the plans to eventually get into home collection of essential services which have been highlighted on slide 23.
Yeah. So, see, from a overall the B2C market, as we call it, we had announced that we are entering that space. We've already started the franchisee model, so to speak. Having said that, today, after the successful trials that we've had in Maharashtra and Punjab, we are getting a lot of inquiries from people. But we are very selective in the way the entire process is, where we want to really identify some good partners with a long-term vision, because the way we are seeing in the market, there's so much of, the kind of pricing pressure or deep discounting that's happening. So we also want to ensure that there's a strong partnership with these kind of players at whom we want to be associated. So we are not very in terms, as I mentioned in my previous calls as well, there will be, where it will be a slow ramp up, and then all of a sudden we should expect a good spike once our model gets baked well, and we also see strong, these kind of partnerships. Home collection, we've also started there, and like we mentioned, once the franchisee model also gets in full steam, we'll also expand the home collection in all these locations as well. Currently, home location does work in areas like Pune and Bombay, or where we have our network, and we'll be soon launching it across other locations. The reason why we currently don't really focus, because we already have a kind of customer base or captive customer base which comes to our centers. So home collection is again a very differentiated service, and also it means of adding more manpower. So as and when the overall network gets established, then we should be able to leverage all these other verticals of business as well.
Sure. So then is it fair to assume that home collection and other non-walk-in patients is not going to be an immediate focus? And that's honestly good to hear, because I was worried about exactly what you said, the entire cost structure involved with it, and wasn't sure if this will work in semi-urban and rural settings where the density of population will be significantly lower as compared to urban, as well as transportation, etc. would be challenges. So is that a correct assessment?
Yes. So, we've been mentioning that as well. We are very cautious because, in a highly concentrated kind of a market where there are such players, we are also trying to see that we should have a good differentiator. Prices, of course, that's a disruptive model that we have, but at the same time, in terms of quality, the logistics. So we are also studying this, and, as I said, hopefully in the next fiscal, when we have these franchisees, and, accordingly, we will start working on it. Having said that, today also in our government centers, we are seeing an increased participation from private walk-ins. That is the result, because people have now started appreciating that in government centers you are getting such kind of facilities, and we are seeing a very good, healthy, increasing trend, in these centers as well.
Sure. Thank you, Yash. Just question on exactly that point. Will it be possible for you to share details of what proportion of your revenues by center or maybe by geography come from private walk-ins as opposed to the traditional government contract? That's one. And second, the BMC contract that you have won. If we do a quick, the number suggests that the revenue potential there from the government contract is about 28 odd crores per annum. Please correct me if I'm wrong. Wanted to understand your sense of whether that contract in particular can be high in terms of potential from private walk-ins, and the fact that it will be in Mumbai and will be in the backyard, so to say, of the traditional large pathology players. Could this be, in your view, a step towards disrupting the pathology diagnostic ecosystem in urban India as well?
Yeah. Again, if you see from a data point perspective, we wish for, it's a bit difficult to capture, because to differentiating whether it's a private walk-in and a government patient, though there are certain measures, but we are also working equally to have our systems, to capture that kind of element from a more meaningful analysis and data analysis. And again, thank you for raising this. We are equally working on it. It will be difficult for me to give that data point upfront now, because the systems are not, again, given that we work in the government centers, it's equally challenging to differentiate very easily. The second part of the question which you asked about from the Mumbai, of course, Mumbai density of population, very high metro like Mumbai. Potential wise, yes, we also believe that it could probably have a better potential or much better potential. And at the same time, we could leverage our presence in Mumbai to also reach out to the much more wider urban markets, with our disruptive prices and the kind of quality that we are offering. So I believe, yes, Mumbai could be, a good base for us to look into and tap into these kind of urban models.
Thank you. The next question is from the line of Nirmana Laha as an individual investor. Please go ahead.
Yeah, thanks for the opportunity. So, Yash, you mentioned that
can you use
Punjab
the handset, please, and not clearly audible, Nirvana?
Yeah. I'm actually using my handset. Am I audible now?
Yeah, the audio is low. Yeah, now it is fine.
Yeah. Yeah. So, Yash, you mentioned that Punjab is already at 12 crore run rate. And if I heard you right, you said that next year is going to be about 15, 16 crores run rate for Punjab. So, we were thinking that due to the Punjab not ramping up, profitability might be depressed. But that doesn't seem to be the case. So, why do you think the margins YOY are down and continue to be down for the last 2-3 quarters?
See, like I said, the margins have been impacted primarily because, for example, we have onboarded employees. Now, for example, Punjab might have about 700, 800 employees, but the revenue is not commensurate to the kind of number of employees we have because the project has not ramped up. Similarly, is the case of Himachal Pradesh where, we've added more employees. So as the revenue ramp up happens, that is where, the contribution will start increasing and you should see an improvement in the margins going forward.
So then the question is, you expect similar numbers in terms of margins to also continue next year, because what you're projecting is a very small growth on the number that you already have for this quarter, for next year.
Yeah, I think, now most of the fixed overheads have been incurred, so we don't expect a further, dent on the margins. That trend should continue where the margins will be stable or improve going forward.
Okay, around crores for next year, is it, for Punjab?
Sorry, could you repeat that question?
Sorry, so your guidance for Punjab for next year remains at around 60 to 70 crores, is it? That's about 17 crore.
Yes, yes.
Okay. And can you help us understand what exactly is this line item called fees to hospitals and others? Is this only to do with private hospital tie-ups or even for government hospitals? And what is the trend in this expense item going forward? I can see it's reducing. So can you please explain this?
Yeah. Basically, what gets captured under the fees to hospital is there are two components. Like one is we are also currently tied up with various medical colleges and private hospitals where we have a center. So there's a certain revenue share that we do to these hospitals, and then there is a element that we have in some of our bigger projects like Punjab or far-flung locations where we have business associates, as we call them, with whom we work in serving the state. These are very remote locations, so to the tribal areas or the remotest corner. For example, if I give you in Himachal Pradesh, we have a center which is near the Tibet border. So it's absolutely impossible for people to go there. So we leverage these local partners to help us in terms of the logistics, in terms of sample collection, and these are the partners to whom it's a straight-away arrangement of a revenue share. So basically, it doesn't become a fixed cost. It is linked to the revenue, and at the same time, they're also incentivized, in terms of helping us not only increase our revenue, but also ensure that quality service is being delivered. So this is how the business partners and the revenue or the fee to the hospital arrangement works. I hope I've answered your question.
That part is completely clear. How does the fee to the hospital, like what does the hospital or medical college deliver to Krsnaa in return for the fees? The referral kind of
space, right? So when we are operating inside their premises, the medical colleges or the hospitals give us the space, and that is one of the reasons why they expect a revenue share because it's a kind of a partnership, right?
Okay, so this is for your private tie-ups, the fees to hospitals.
Yes.
Okay, thanks.
Thank you. Ladies and gentlemen, that would be our last question for today. I would now like to hand the conference over to Ms. Pallavi for closing remarks. Thank you, and over to you, ma'am. Pallavi ma'am, your line is muted, I believe.
Yeah.
You're on.
Thank you. Thank you everyone for joining our Q2 FY23 earnings call. I hope we have answered all your questions. And in case you have any further questions which have remained unanswered, feel free to connect us with our investor relations team at the Churchgate Partners, and looking forward to interacting with you in the future quarters. Thank you and have a great evening ahead.
Thank you very much.
Thank you. Thank you, everyone.
Ladies and gentlemen, on behalf of Equirus Securities Private Limited, that concludes today. Thank you all for joining us, and you may now disconnect your lines. Thank you.